Good morning from Tokyo. This is TOI Japan Market Radio for Sunday, March 29, 2026. I'm your host, bringing you the latest on Japanese equities, the yen, and rates for global investors tracking Japan exposure. Joining me as always is our portfolio manager focused on Japan macro. Today we've got an interesting setup to discuss.
Thanks for having me. So right off the bat, listeners should note that Japanese markets were actually closed today for a national holiday. That means no trading in the Nikkei 225, TOPIX, or Japanese government bonds. However, we still saw some important developments overnight and over the weekend that will likely drive sentiment when Tokyo reopens tomorrow.
Exactly, and even though we didn't have price action in Tokyo, there's plenty to unpack for investors positioning ahead of the week. Let's start with a headline that caught our attention this morning. French President Macron is currently conducting a visit to East Asia, and at the same time the Bank of Japan released an economic survey, while Indonesia is dealing with inflation pressures. These three stories are converging in an interesting way. Walk us through why this matters for Japan watchers.
Sure, let's break it down. First, Macron's East Asia trip is geopolitically significant for Japan. France has been deepening its Indo-Pacific engagement, and any high-level dialogue in the region has implications for trade partnerships and defense cooperation. Japan is watching closely because it aligns with Tokyo's own strategic priorities in the region. Second, and perhaps more immediately market relevant, is the BOJ economic survey. This survey captures business and household sentiment, which is critical input for the Bank of Japan's ongoing policy normalization cycle. If sentiment is strong, it gives the BOJ more room to continue tightening. If it's weaker than expected, that could signal caution.
And Indonesia's inflation pressures fit into this how?
Indonesia is a major trading partner for Japan, so inflation dynamics there matter for regional growth prospects. More broadly, it's a window into Southeast Asian inflation trends, which can influence the BOJ's own policy calibration. If inflation is running hot across the region, it adds to the case that price pressures aren't going away, and that could reinforce expectations for further BOJ tightening. Conversely, if it's just Indonesia-specific, the impact is more muted.
So when Tokyo reopens tomorrow, how should investors be thinking about positioning in Japanese equities and the yen based on this?
For equities, the Nikkei and TOPIX will likely take their cues from the BOJ survey results. Stronger sentiment would be supportive, especially for cyclical names and exporters. But if there's any sign of weakness or if regional inflation concerns are weighing on growth expectations, we could see some caution. On the yen side, this is really about rate expectations. If the BOJ survey is dovish, that could weigh on the yen. If it's hawkish, we'd expect yen strength. And for Japanese government bond yields, the survey is a key input for the BOJ's yield curve control policy, so any surprises could move the curve.
Got it, so a lot will depend on the details when we get the full read-through. Shifting gears now, there's another story that's generating attention, this one out of the United States. Reuters is reporting that certain trades executed ahead of Trump policy announcements are raising questions, potentially pointing to front-running or information asymmetries around upcoming U.S. policy moves. Why does this matter for Japan?
It matters a lot, actually. Japan's economic outlook is heavily tied to U.S. policy, especially on trade. We're talking about tariffs on Japanese exports, particularly autos and semiconductors, which are huge sectors for the Nikkei. We're also talking about dollar strength, which directly influences the yen and therefore BOJ policy considerations. If there's market dislocation or regulatory scrutiny around these trades, it introduces uncertainty into capital flows and risk sentiment. Japanese institutional investors have significant U.S. exposure, so any volatility in cross-border positioning is something they have to manage.
So for Japanese equities, what's the read-through here?
Near term, we could see volatility. Japanese exporters, especially in autos and electronics, are very sensitive to any hint of tariff policy changes. If Trump is about to announce new tariffs, that's a headwind. On the other hand, if this scrutiny leads to regulatory action that stabilizes markets and reduces uncertainty, that could actually be a positive. It's a wait-and-see situation, but the key is that investors should be monitoring Trump policy announcements closely. Clarity on trade and tariff intentions is what Japanese equities need right now.
And for the yen.
If U.S. policy uncertainty increases, we typically see safe haven demand for the yen, which would support it. But if U.S. growth concerns start to emerge because of policy missteps, that's a more complicated picture. It could pressure yen strength if risk-off sentiment dominates, or it could weaken the yen if it triggers a broader dollar rally. For JGB yields, I'd say the impact is limited unless we get significant treasury volatility spilling over. Right now, positioning in Japanese government bonds would likely remain stable unless there's a broader policy shock.
Understood, so the bottom line is to watch for any further Trump policy moves and how they affect trade expectations. Now, staying with the geopolitical theme, we've got another headline that's relevant for regional risk sentiment. China has officially protested a U.S. alert regarding security rules changes in Hong Kong. This is an escalation in U.S.-China tensions around Hong Kong's governance and regulatory environment. How are you thinking about this from a Japan investment perspective?
This is a classic geopolitical risk premium story. Elevated U.S.-China friction increases uncertainty across the entire Asia-Pacific region, and that typically translates into higher volatility for Japan as well. Hong Kong is still a critical financial and logistics hub for East Asian trade, so any disruption there affects Japanese companies with significant Hong Kong operations or regional headquarters. We're also talking about trade policy uncertainty more broadly, because U.S.-China tensions historically correlate with protectionist measures that can indirectly hit Japanese exporters.
And in terms of market impact, equities, yen, yields, how does this play out?
For the Nikkei and TOPIX, I'd say neutral to slight downside pressure. Export-heavy Japanese equities could face headwinds if U.S.-China tensions disrupt supply chains or dampen regional growth expectations. That said, Japan is less directly exposed than China-focused peers, so it's not a huge hit, just something to watch. For the yen, we'd expect modest strength. Safe haven demand typically supports yen appreciation during geopolitical escalation, especially U.S.-China flare-ups. And for JGB yields, I'd expect downward pressure. Risk aversion sentiment supports demand for Japanese government bonds, particularly longer-dated maturities, so yields would likely compress a bit.
So the key here is to monitor whether this escalates further, any U.S. policy responses or Chinese retaliatory measures.
Exactly. If this stays at the level of diplomatic protest, the market impact is modest. But if we see concrete policy actions, sanctions, or further restrictions, that's when it becomes more material for Japan positioning.
Alright, so let's bring this all together for our listeners. We've got Japanese markets closed today, but when they reopen tomorrow, investors will be digesting the BOJ economic survey, watching U.S. policy uncertainty around Trump's moves, and monitoring U.S.-China tensions over Hong Kong. What's your main takeaway for global investors with Japan exposure?
The main takeaway is that Japan is navigating a complex macro and geopolitical environment right now. The BOJ is still in the middle of its policy normalization cycle, so any data that influences rate expectations, like this economic survey, is critical. At the same time, external risks, whether from U.S. trade policy or U.S.-China tensions, are adding volatility. For investors, the focus should be on Japanese exporters and how they're positioned for potential tariff or supply chain disruptions, and on the yen as a safe haven play if geopolitical risks escalate. JGBs remain a stabilizer in portfolios, especially if risk-off sentiment picks up.
That's a great summary. And just to reinforce, we're not giving specific buy or sell recommendations here, but rather helping you understand the drivers and themes that matter for Japan positioning. If you're following Japanese markets regularly, make sure to subscribe to TOI Japan Market Radio so you don't miss our daily briefings. We'll be back tomorrow with full market coverage once Tokyo reopens. Thanks for listening.
Thanks, everyone.